Welcome. Today we're going to deconstruct the pretty sophisticated world of tax strategy and fiscal policy. And we're going to look at the tax code not as some kind of burden, but really as a system of incentives.
Okay, so let's just dive right in with a fundamental question, one that completely shifts your perspective. Is the tax code just a bill that you have to pay, or is it more like a game to be won? This is the core mindset shift we're going to explore.
To really understand the playbook, first we have to recognize the playing field. And according to expert analysis, there are essentially two different tax systems out there. One is for the employee who earns a wage, and the other is for the business owner and investor who really gets how to leverage the rules. This idea, which you hear from a lot of financial analysts, really reframes the whole concept. It turns taxation from this simple obligation into a system of government incentives. So the crucial point isn't just about paying up. The code is actually designed to encourage you to do certain things, like provide housing or invest in new equipment for your business. So understanding this playbook, that's everything. So before you can run any of these plays, you need a solid structure, a foundation that's built to protect your assets and really maximize tax efficiency. So let's take a look at how this financial fortress is actually built. Now, a really powerful way to think about structuring your financial life is what some analysts call the T-formation chart. It's basically a visual model, and it's designed to create a fortress around your wealth by separating your active business from your passive wealth-building assets.
Okay, what's so interesting here is how this visually organizes your entire financial world. The trust, right there at the base, that's your foundation for your legacy. The left arm, that's your active business, your day-to-day hustle. And the right arm, that's where you hold your passive assets, things like real estate. The genius of this is that it keeps everything separate. A problem over here on the left doesn't take down the right.
All right, with that structure in place, let's look at a key play for business owners. This strategy is all about reducing the tax you pay on the active income that's being generated by those entities on the left side of our T formation. This is hands down one of the most powerful, but also one of the most misunderstood strategies out there for entrepreneurs. It's not actually a different kind of company, it's just a tax status, an election you make for your LLC that can unlock some pretty significant savings. And this just perfectly illustrates the savings. Look at the left side, standard LLC. Every single dollar of that $100,000 in profit gets hit with a 15.3% self-employment tax. That's over 15 grand. Now, look at the right. By making that S-Corp election and paying yourself a reasonable salary, let's say $30,000, only that part is subject to the tax. The other $70,000, that gets distributed as profit and it's free from that self-employment tax. It's a huge difference. Okay, next up is a really powerful play that uses real estate to create some big tax advantages. The idea here is to generate what are called paper losses that you can then use to legally reduce the income from your main business or even a W-2 job. This is a total game changer. See, normally any losses you have from rental properties are considered passive, which means they can only offset other passive income. But this loophole, it completely reclassifies those losses as active, as long as your average guest stay is 7 days or less and you meet some very specific participation requirements. So this breaks down exactly how an investment property becomes a tax-saving machine. Now, there are two really critical steps here. Number 3, material participation. That means you have to prove you're actively involved, and you do that by tracking your hours. And number 4, using a special accounting method to create a big upfront paper loss, which we're going to talk about right now. So how do you actually create those big paper losses we've been talking about? Well, the secret is a technique called accelerated depreciation, and you unlock it with something called a cost segregation study.
I mean, this comparison is pretty striking. Standard depreciation is like a slow drip, a tiny deduction every year for nearly 3 decades. A cost segregation study, though, it's totally different. It lets you separate out all the components that aren't the core structure, things like carpets, appliances. and deduct their cost way faster. We're talking 5 to 7 years. And what that does is create a massive deduction right in year one. Now, these strategies don't just exist in a vacuum. They can get massively amplified by shifts in national fiscal policy. And one of the most powerful amplifiers we've seen in recent years has been a provision known as bonus depreciation. The best way to think about bonus depreciation is like a power-up that the government offers for business investment. It lets you take this huge deduction in the very first year for any qualifying assets, and that includes those components from a cost segregation study or even things like vehicles that weigh over 6,000 pounds. As you can see from this chart, this really powerful incentive has been phasing down from 100% back in 2022. But, tax policy is always changing. There have been recent legislative proposals aiming to bring it back to 100% permanently. And if that happens, it would significantly boost the power of the real estate business strategies we just talked about. So, after all of this, what's the really crucial point to take away? We've looked at structure, at business income, at real estate, but the theme underneath it all is about a fundamental shift in perspective. It's about changing your entire view of the tax system itself. Ultimately, when you understand this framework, it empowers you. You start to see the tax code not just as a bill you have to pay, but as a map of government-approved incentives for building the economy. The strategies are really just a reflection of the rulebook. So the final question is, how are you going to use that map?